Hello, chart watchers, and welcome to this Friday, February 8th, 2019 Market Watchers live show with your hosts, Tom Bowley and Mary Ellen McGonigal. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, the selling continues so far today. You can see the Dow Jones Industrial Average currently down 214 points. The S&P 500 is down 16, but still hanging above key support. We'll talk about that in just a minute. The NASDAQ minus 37 points, and the Russell 2000 also down about 7 2/3. 10-year Treasury yield continues dropping. This is not good news for equities. Bond market has been telling us for a while now things are not great looking ahead in terms of our economy. The stock market's been ignoring it of late, but the last couple of days we are seeing the equity markets turn down. 10-year Treasury yield, you can see currently down nearly 2 basis points, just below 2.64%. Volatility back on the rise today, up 3.7%, although it is off the highs of the day. Utilities, consumer staples, real estate leading to the upside. These are all defensive groups. So in addition to money rotating into treasuries, we also have money rotating into the defensive equity groups. Energy, clearly the laggard to the downside, not just today, but for the last couple of days as crude oil prices have fallen. And on the Dow Jones, the worst performer so far today, United Health, although it was being challenged by Intel, but both down close to 2.5%. You can see UNH here actually threatening a breakdown, not just below its 20-day moving average, but also below some recent price support, which had been holding around the 265 area. And then finally, the biggest drop by far on the S&P 500, Henry Schein, SHIC, which is down more than 26% today. All right, Mary Ellen, it's been a week since you've been with me here. It's Friday again. I can't believe how fast the weeks go.
Crazy.
But last few weeks, we haven't had anything really to talk about on the what's not side. I think you might have a few things today.
Yep, things are picking up on the downside, and we're seeing a little more selling pressure out there in the broader markets. But as it relates to earnings, my gosh, the gaps up and the big increases in some of these stocks is really unparalleled. A study was done, and we'd have to go back to 2009 before we've seen an earnings season that's been so upwardly responsive to reduced expectations.
Yeah, that's the key. I don't know if you've done any studies or, have access to any studies, but one thing I've noticed as I go through all these earnings reports this season is the number of companies that have lowered guidance going forward. I've never seen this many companies lower guidance. And I know, that we took a big hit in the fourth quarter. So some of that I think is priced in. And maybe that's what the market's telling us is, okay, that's priced in. Everything's okay as long as the second quarter is not bad. But have you seen any studies, or have you done anything to see?
Yeah, actually, I was going to present a slide today, but we won't get to it. But Zacks does a lot of work as it relates to earnings, and they were looking at the Q1 guidance from management, and it's not looking pretty. A lot of the outlooks are being lowered quite a bit.
Yeah, so every time I see them, I put them on an Excel spreadsheet, and I code the ones that are guiding lower in red and the others guiding higher in green, so that I can just kind of take a quick look each day. And it's just a lot of red that I see every morning.
Wow.
A lot of companies but many of these companies that are lowering guidance are still rising. A perfect example was O'Reilly's that came out, missed on, I think, maybe top and bottom line, lowered guidance and went up $8 at the open. So,
well, yeah, that's the unbalance that's happening out there.
No doubt about it. All right, we got a lot going on. I know I don't want to cut into any of your what's hot, what's not time. So that you get through your 4,226 stocks. But anyway, you can see on your screen the upcoming schedule. Aaron will be doing a workshop on Tuesday. On Wednesday, we got a special guest, Rick Bensignor. He'll be joining us. And then just as a reminder, we do have President's Day coming up a week from Monday. So no Market Watchers Live. Of course, the market will be closed. So you wouldn't want to listen to us all day talk about something that's not moving. Anyhow, today's agenda, you can see what's hot, what's not. Mary Ellen, kind enough to join us again this Friday to go over those. AMBEV, ABEV, interesting chart. Might want to take a look at it maybe ahead of time, see what you think. And then I will annotate, give you my thoughts on that stock when we get there. And then we're going to wrap up the show today with Turning Point, which is a segment where Mary Ellen and I will give you a list of stocks that we think, for whatever reason, is at a key level where we could see a turning point. Maybe it's up against resistance, and if it doesn't break through it, we could see a move back to the downside. But anyhow, we'll show our different strategies and philosophies on how we come up with some of those picks and share those with you at the end of the show today. All right, let's get going. There were no economic reports today, so I am going to just go right into the 10-year Treasury yield, and we can take a look. Notice the 10-year Treasury yield here. We are down 2 basis points now, 2.63%. Actually, nope, that was before the show. Let me give you an update. I think we have actually moved up a little bit since then. We are at 2.64, so we have moved back up just a tad, but still clearly testing the lows that we saw at the beginning of February, right around this 262, 263 area. If that fails, we only have the lows back down in the beginning of January. And of course, the decline in the yields was kind of actually happened before we saw the big drop in the S&P 500. You can see the yields actually topped in the second week of November, but the S&P 500 began its big decline at the beginning of December, if you remember. So this move down here in the second half of November was a precursor to the S&P 500 dropping. So we can't ignore. I mean, I can look at some technicals on the S&P and say short term, I expect these levels to hold. But if they don't hold, given what's going on in the Treasury market, I think we have to be really careful. All right, let's move on to earnings reports. And there were a bunch. I focused here on the slide on this morning's earnings, but we'll talk a little bit about some that came out last night as well. You can see, for the most part, pretty good numbers. Hasbro came up well short on earnings and also on revenues, and we'll pull that chart up in a bit. But overall, not a bad list of earnings reports. So let's take a look first at some companies that reported last night. The first one is Fiserv. FISV. Really nice flagpole and sideways action, consolidation, which kind of fits the flag. So waiting to see if we get a breakout. I was wondering if we would get one with earnings. But Fiserv simply met top line and bottom line estimates. And when I refer to top and bottom line, I'm talking about revenues on the top line and earnings per share on the bottom line. Wall Street gives us their estimates, and then we can see, and that's basically how these companies are valued based on those estimates. So when you get stocks that are beating estimates, a lot of times you'll see a positive reaction. When you see companies missing estimates, then you get the negative reaction. In this case, we didn't really get anything. We got exactly what Wall Street was looking for, and the stock up 1%, simply staying in this pattern. So we'll see where we go. They guided in line as we move forward. Next up, and I talked recently about the Waste Disposal and Services Group being really strong. RSG has been a pretty good performer. I'm going to pull this up on a relative chart so you can see what I'm referring to. But here you can see the overall group not yet breaking out. But here we have actually did make a slight breakout on a closing basis on RSG. So what you had was a stock that was actually outperforming its peers for quite a while. It has been pulling back, but it's still a really solid performer versus the S&P. And you can see the overall group is strong versus the S&P. So I actually like this reversal on the 20-day moving average. Moving down below the 20 looked like it was breaking down. It's come back up. I think this looks pretty good. They came up a little short on the revenues, $2.53 billion versus $2.54 billion. They did beat on the bottom line by 2 pennies, 80 cents versus 78 cents, and they guided in line. FTV, next up, Fortive. This one is failing this double breakout. That makes me a little nervous when I see the tail go up. Looks like it was breaking out intraday. When I talk about a tail on a candlestick, that means intraday move. So here we got an intraday move up at 77.49, but currently we're back down at 76.03. So it's leaving this long tail to the upside. FTV missed on the top line, beat on the bottom line, but they guided lower. Another example of a company that guides lower and is still up 2% today, telling me that really what happened here and the fact that we're guiding lower now, this is the fundamental news. The technical news happened in the fourth quarter when the stock took a big dive to the downside. Technicals precede fundamentals. Always remember that. VeriSign, VRSN, really big beat on the bottom line, but they came up slightly short on revenues. Still, I think this is a stock that looks really good to me. You can see continually breaking out while the group, its peer group, was falling. You can see relative to its peers, it's one of the best. Relative to the S&P, it just keeps moving higher. and the group is beginning to regain strength against the S&P 500. So VeriSign, which missed on the top line, bottom line though, get this, $1.58 versus $1.21 expected, and then they increased their buyback. So the stock gapped up a little bit, pulled back, but I think this uptrend is strong. If we could get a 20-day test, I would be a buyer of VeriSign. MSI. All right, let's take a look at MSI. All right, this is Motorola Solutions. Huge gap up and breakout today. The stock up more than 13%. They did beat on the top line, beat on the bottom line. I think there was a little mixture in their guidance, but most of it was higher. I think when they looked out for the year, they raised on both revenues and earnings per share, from what I recall. But great reaction. You can see the peer group declining and the stock continuing to move higher. So we have a very strong relative performer in that telecommunications area, and also it is performing well versus the S&P, and the overall group has been in a fairly steady uptrend relative to the S&P 500. So I think MSI is a really nice looking chart and a good company. Expedia reported last night. Expedia beat on the top line barely. Bottom line, $1.24 versus $1.07. So pretty handy beat there. Did gap up. You can see the resistance here at 135, here at 137.50. We opened at 135, selling off, but so far holding that low and starting to bounce back. I think Expedia has been performing really well here, and relative to its peers has been holding on to its strength. Actually, with earnings today breaking out on a relative basis versus its peers to about a 4 or 5 month high. A couple of earnings that I mentioned earlier on the slide. So these are companies that reported today. EXC, I was kind of surprised that the stock was hit at the open. This is a company that has that really beat big time on the top line. $8.8 billion versus $6.6 billion. They did just match estimates on the bottom line though at 58 cents, and they guided in line. But the stock came down quite a bit. I mean, it's down more than $2. And for this stock, which doesn't move very fast, $2 move at the open was pretty big. But you can see the buyers returning. And once again, here you have a stock that is wildly outperforming its peers. And its peers actually been doing pretty well in that fourth quarter of 2018. Of course, this is a more defensive area of the market. And with the market selling off again, you can see that that defensive theme starting to come back into play again. And I think that's why we're seeing a nice recovery here on EXC. All right, let's see. Hasbro. Oh, Hasbro, what an ugly report. Was it built in? Apparently not. Well, I shouldn't say that. We did have a nice rally, and we're still well off the earlier lows. But listen to this report. Hasbro, $1.39 billion in revenues. Market expecting $1.53 billion. So you got almost a 10% miss on the top line. $1.33 in earnings. Market expecting $1.68. So a 35-cent miss. That's more than 20% miss on the earnings side. I didn't see their guidance, but the stock, after initially moving higher this morning, which would have been a head scratcher, has reversed back down quite a bit. It is now about 6 3/4 off of its earlier high, and now threatening to break down back below its 50-day moving average. So, and volume very heavy as well. So not very good action here. A couple of other earnings of PSX just blew away the bottom line, as you may have seen on that slide. 487 versus 286, or excuse me, 276. But not able to make a breakout technically. So until we got that breakout, I would still be a little leery because it is in the space, energy, which has been not so good, especially this past week. All right, maybe let's do one more. Let's take a look at CBOE. CBOE did beat on its bottom line. We got a nice positive reaction. This is one that Roman, our guest yesterday, talked about, I believe, on the short side. He thought this could set up as a nice short. And the stock, if it breaks back down below this 90 level, not a whole lot of support. I don't really see any except maybe a little bit of intraday. The stock went down to 92 and change earlier, has bounced back up, but I think still got a lot of overhead resistance to try to get through. All right, Mary Ellen, I know you follow all these earnings really well, and there's been a ton out this week. I mean, anything to add on the ones I have, or do you have any of your own?
Yeah, actually, I'm going to cover a couple of others that were not reviewed here because they're a little bit compelling looking, and a couple of them have some stories that are worth sharing. So let's go ahead and take a look at some of the stocks that did report before the open today. This first one is EEFT. It's Euronet Services, and this stock was a big winner last year. When you see these big gaps up here, I'm taking you back to July of last year, October, these are all earnings releases, and we can see that the company obviously came in ahead of estimates, had strong numbers, the markets liked it, and we're seeing the same phenomenon today. The stock's up over 8%, and the company is really big. They are a payment processor, but their big area of growth is they provide the oh my goodness, I can't think of the name, but the cash machines, ATMs overseas. They're big over in Europe, and ATMs are still a big part of the space there. And they also are very big in India. There are a lot of Indians that are getting bank accounts, so they're seeing big growth there. But I wanted to point out to you technically, this stock, as you can see, it reached a peak in price back in December, sold off with the broader markets, and it's been steadily creeping up. But what we have happening today is the stock broke out of this base. Take a look at that volume. That's very significant, indicating institutions are in. So we have a nice sound break out of a base. Your RSI is positive, and your MACD, which had already had that positive crossover, is up here, up above that net neutral in positive territory. So we can take a look at a couple of other stocks. Another one is COTY, and this, of course, is Coty, and they are big in the beauty industry. And take a look at this gap up here. It's up 27% in response to their very strong earnings, and they are number one in the fragrance industry. They also CoverGirl. They have a number of very well-known brands, and what the company did is they beat, but it was on very low expectations. This is typical of what we're seeing in the markets during this current earnings season, and we can see that the shares, take a look at this big decline going into this report. The company over the last 12 months was down 64%. So indeed, very much due a bounce, if you will, but it is up 27%. What I did want to point out here is the fact that the stock pre-market was up 16%. So for those of you that get up early or you watch the markets pre-open, you may have think that you missed, but again, indicative of what we're seeing. I'm going to pull up an intraday chart so you can get a sense. Here's that gap up on the open, but the stock has steadily increased subsequent to that. So you can look at some of these intraday charts to keep an eye on some of these stocks that are gapping up but are continuing to advance beyond the open. I think we have time for one other name that reported before the open today, CLF, and this is Cliff Natural Resources. Take a look at this advance here. So this is taking us back to the beginning of this year. The stock's been steadily improving. This is a company that is actually being helped by the recently imposed tariffs because they do deal in steel. And the company did come out with earnings. They popped up 11%. And so what we saw here was 600% year over year growth, 200% above estimates. So one of those few companies that are actually positively impacted by, pardon me, these tariff impositions, and if we do see a trade deal, they will be negatively impacted.
Yeah, one thing to add there, Mary Ellen.
Oh, sure.
Before you get into your the what's hot, what's not segment, CLF, I noticed back at the end of January, you can see that huge spike in volume to take the stock definitively above its 50-day moving average. And I know you talk about that a lot as being very constructive when these companies move back up above the 50, and with that heavy volume, it's not too surprising, I think, that we're getting a report that is viewed positively by traders.
Yeah, actually, Tom, you're absolutely right, because a lot of times what you'll see going into earnings, analysts begin revising their estimates higher, and that, of course, is going to be positively impacting the company. CLF had another incident where a competitor unfortunately had a very serious, actually there were fatalities, veil. And so that really, they had an accident at their steel processing plant. And so CLF is expected to take over some of their orders and positively impact their earnings going forward. So that's another reason on that one.
Perfect. Well, I know everybody is sitting on the edge of their seats with bated breath.
Yes.
Wait this week's what's hot and what's not, because actually we've actually seen some down movement in the market for the first time in several weeks. And so you've got, stocks on both sides. So I'm going to let you take it away.
Yeah, you're absolutely right, Tom. For the last few weeks here, it's been all about what's hot. The markets have been on a tear, so we're starting to see a little pushback here. Going into this week, we were into week 6 of a possible 6 straight week of gains. So we are seeing a little bit of pushback. So I'm going to begin by taking a look at what's hot. And the first company that we can take a look at is Snap. For those of you not familiar, Snapchat, it's a very actively used mobile device, or actually not using the proper terminology, but it is an app that allows individuals to connect. And we can see that the stock gapped up here, and it's all about the earnings. But this is another one where we can see this severe decline here going into earnings. The stock, since February of last year, it was actually down 200%. And I can quickly pull up a weekly to give you a little better sense there. And you can see just how much this stock really did get beaten down. So we had a company that came in with numbers that, on a deeply depressed stock price, they came in, revenues were up year over year, 5% above estimates. So really not super powerful, but just enough in the way of coming in ahead of expectations. So we can see this gap up. 3 different analysts have subsequently come out. They raised either their price target or they upgraded the stock. Management guided higher for revenues going into Q1, but I will tell you, technically, the stock still has potential resistance here at this downward trending 200-day simple moving average. That's this blue line. We can also see on the daily chart here that the RSI is up above 70. That's indicating that it is overbought. Not the end of the world, but certainly a signal that the stock could see a little bit of pressure. Although we are up 4% today in a down environment, the MACD is in positive territory, up above that net neutral 0. Another stock that we can take a look at that's internet related is Travelzoo. For those of you not familiar, this is a company that provides deals not only on traveling, but also restaurants, really a lot of different areas. And we can see this big, nice gap up going into today. The stock was up 23. We're up another 3% today. Now, this one is technically a little more, certainly in a better position. It's up above these key simple moving averages, which can tend to act as resistance. We can go back here, October, unable to break up, back here in November. Certainly the market pressures were there as well. But once we're up above these key moving averages, the stock is a bit freer to advance. But here again, the RSI is up above that 70 in overbought territory. We can see going back here that it was a signal that stock did pull back a bit, but the company came in 85% ahead of estimates, and their real big growth is globally. They continue to win awards in Europe for their presentation, again, for their deals that they offer. So the next area in what's hot that we can take a look at are semiconductor stocks, and that may be a little bit surprising because let's take a look at the semiconductor index, and we can see that it's down again today. I'm going to pull up the weekly on this very quickly, and you'll see that it is under a little bit of pressure here, but individually we're seeing some bright spots here. We can take a look at MXL. This is a company, Max Linear, and take a look. The stock's up 13% on the week. I'm going to go ahead and pull up the daily. And the compelling thing here, item here, is that the company came in 5% above estimates, and they beat on the revenue side as well, but really handsomely rewarded. We can see this big uptick here. Stock was up 14% on that release. What we're seeing here subsequently is just a little bit of a pullback, really not much given that the extreme advance that the stock had. And then we like to look for stocks that are showing signs of reversing. So we can see that this is a company that really had quite a bit in the way. Like a lot of semiconductors, a lot of these stocks peaked back last spring. Big downtrend here, but now we've overcome. We're up above. I talk a lot about these simple moving averages because, again, going back historically, you can see how they can tend to act as resistance. We're now up above that. So MXL is one. We can take a look at VSH is another semiconductor stock. Again, all about the earnings, 14% ahead of estimates, 15% year over year, 57% year over year earnings growth, and the revenues beat as well. Market likes it. Stock gaps up. Now, this one too is really in a back and fill, kind of a consolidation phase following this big gap up, and that's very, very normal. What you will see, again, we've broken up above that 200-day, giving the stock a bit more of a freeing ability to advance further. We can take a look at SWKS. This is another, this is Skyworks Solutions, and this is another one that had a really significant price decline, and it had everything to do with iPhone demand softening. That's the space that this stock or this company is involved in, and we can see that they did come in. Actually, they were down 9% year over year in their earnings. However, and then also their outlook going forward is still rather weak. So interestingly, the stock did rally right up to that 200-day simple moving average. We can see subsequent to that the stock is selling off, and this is very rightful because this company, again, they did come in, their losses were less than anticipated, gapped up, but really the anticipation going forward is not that strong. So we can see the stock is finding resistance at this downward trending simple day 200-day simple moving average. We can take a look at one last semiconductor stock, and this is Microchip. This is really a bellwether semiconductor, so a lot of eyes on this. We can see that it gapped up 22% year over year earnings, 5% ahead of estimates. However, down not so positive looking Q1 outlook, the outlook going forward. So this is another one that in line with that is pulling back because of that reduced outlook going into the first quarter. So another area that was hot this week, we can take a look at some of these software stocks, and software stocks really have been quite strong going into certainly the middle part of last year prior to the correction and the bear market that we saw. A lot of strength here because very rightfully, there's a lot going on in the way of growth. Take a look at this advance here. This is Paycom software, and the stock gapped up in response to very strong earnings, 24% growth year over year. And we can see that this particular stock came out of this very nice base. I talk a lot about stocks breaking out of bases, and we can see this gap up here. The company analysts were revising estimates going into earnings, and we can see this gap up. The stock's up 3% today, so really superior strength. Take a look at that volume on that gap up. That's telling you that institutions are in there. They want to own the stock. The outlook is looking quite constructive. The stock is overbought, however. This is the RSI. We're up here above 70. We can go back here historically and see it can remain in that overbought position for some time, but you do want to be on the lookout for this potential breakdown, not only with the RSI, but a potential breakdown of below key moving averages. But currently we're still in good standing here. We can also take a look at This is another software stock that came in with very strong earnings. And we can really see a bit of a theme here as far as some of these software stocks that reported this week. This is Paylocity, these payment processors, and we can see this gap up here in response to their earnings. The company was up 11%. We're seeing a little bit of pushback here, but really just consolidating and digesting this advance in a very positive fashion. We can see this green line is your 10-day simple moving average, and the stock is finding support at that upward trending simple moving average. And we have time to actually take a look at one last stock in this software space, BOX. And this stock did not report. This uptick that we're seeing here is all about a Goldman Sachs upgrade. The company handles they do data management in the cloud. So this gap up here is all about that upgrade on potential earnings. The outlook was upgraded. And we can see that the stock very handily broke up above that 200-day simple moving average. That's your blue line here, allowing the stock, giving it a little bit more room to advance upwardly. They're not due to report earnings for at least another month, but at the very least, they do appear to be in the process of reversing this downtrend.
Hey, Mary Ellen, I noticed, first of all, this week, even though it's been a down week, the software stocks, the software index, the DJUSSW, is actually breaking out on a relative basis to the S&P 500. So
oh, wow.
It doesn't mean that software stocks are breaking out, just on a relative basis. So money clearly is still rotating towards software. And I thought I'd have you look at one other stock that just reported last night. It's a smaller software company getting a very positive reaction on heavy volume, and that's Rapid7, RPD. If you could maybe just pull that one up, and then you can go on after that one.
Oh, wow. Yeah, take a look at that. That is very indicative and typical of what we are seeing. And I'm imagining that this company did come in with earnings that certainly were above estimates as far as looking quite constructive. And this particular company, we can see this type of advance going into earnings. And a lot of this, I'm sure, has to do with analysts coming in and revising their estimates higher. And this gap up, really, the stock right now, currently, take a look at this volume. And again, that is institutions coming in. They need and want to own this stock. We're a little bit in the overbought area, but it does certainly look to have legs as far as although a little bit extended, it really looks quite constructive. So
actually, I was just going to say, I looked it up real quick, and they did beat their bottom line by 4 cents. They beat their top line, 70.6 million versus 66.7 million. They guided Q1 EPS below consensus, but they guided their revenues above. And then when they looked out over the full year, fiscal year 19, they guided both higher. Both revenue and
earnings. Wow, that's fantastic. Yeah. And you can see the real power and strength in that big move. Again, you want to key in on that volume as a signal, because that's indicating real oomph, and it gives it legs, if you will, to proceed higher.
Awesome.
Yeah, so we can go ahead and move on. I'll take a few minutes here and take a look at some consumer-related companies and stocks that were hot this week. The first one we can take a look at is Papa John's. And for those of you that follow the market closely, this is not a pretty chart, but the company has been in the news quite a bit. A lot of controversy surrounding the founder of the company, but the stock is actually up 11% this week. A hedge fund came in and infused $200 million into the company. It is a hedge fund that specializes in turnarounds of retail restaurants. So that stock, while it is up, I would not touch it, because there's just a lot of volatility in here, and this turnaround is going to take some time. There's better names that we can certainly take a look at, even in consumer. Let's take a look at Chipotle. This is another one that really was in the news quite a bit going back historically with their troubles relating to their products and bacterial issues, but take a look at this turnaround, up 11% this week. The company came out 28% year-over-year earnings, 25% above estimates. They cited increases in menu prices, and believe it or not, lower avocado prices helped the stock. But technically, we can see the RSI is up above that net neutral 50. We're looking at a daily chart trending upward in a positive fashion. MACD had that nice crossover black line up through the red, also trending upward. Another quick consumer, actually restaurant related stock that we can take a look at is Shake Shack. And these guys started out in New York. The company came out actually not earnings driven here. What they did is they opened a new outlet in Shanghai, and lines have been people have been queuing up around the block, 2 blocks long, to get into. Even though they've been open for a week, they're opening up in Houston, Texas. So it's all about growth. Big 5% move this week, but we're still kind of trapped here. This is a stock that's not quite positive yet. Your RSI is not up above that net neutral, and your MACD has just now having that crossover, but it's still below that net neutral 0. So we can take a look at a couple of other areas very briefly that are doing well this week. And one area that I want to look at is financials. Tom talked about the yield, the 10-year, and we're seeing a lot of movement here in some of these bank stocks. This is KRE, is the regional banking ETF. We can see it's now dropping a bit today. Going into the open, it was up 2.5%. And actually, a lot of these regional banks are coming in. Really another story as far as super depressed banking stocks, down and out. This is an example, SAL. They had record earnings and sales. But again, we can look at a couple of other very quickly regional banks that are reporting earnings that are coming in, but not great looking charts, honestly, because a lot of these are going to be super small. Let's take a look at a bit larger name. This is CMA Comerica, and the company actually was up going into the open today. So we're up on the week about 6%. And they came in with very strong earnings. The stock yields 3.2%, but we are still in an area where it does not, we're not quite positive. We're not out of the woods. We want this break up above that 50-day. Going back historically, this is the look that you want as far as a healthy stock, up above upward trending key simple moving averages. Your RSI is not quite positive yet. MACD did have that positive crossover, but we're still below that 0. So again, if we can break up above this 50, RSI, MACD get positive, we're in much better standing. Quick other stock, an area that we can look at on the plus side is healthcare related. This is HQY Health Equity, and this is a company that, again, they did come out with earnings. This company provides employers and corporations with the ability to offer their employees to use pre-tax earnings to pay for healthcare, and they go in and set all that up. They are seeing huge growth, and we can see that the stock is up 11% for the week. We can take a look at a daily very quickly on this one. This is a company that is all about, for those of you that follow the market super closely, you may know that employment numbers have been really super strong. Last Friday, huge growth in non-farm payrolls. So this is a company that will benefit. A big grower last year. So we are seeing, again, it does still have work to do. That RSI not quite positive. MACD is still below that net neutral. So it does still have work to do, but one to keep an eye on. One last area on the plus side is the aerospace defense, and that is another one that is going to be earnings related. A lot of these companies reported earnings last week. For those of you that watched last Friday, you may have noticed that a lot of these defense related companies came in with strong numbers. Boeing is one of the strongest. This is that gap up on earnings. It really had a super brief, only 3-day period of consolidation before running up further. Now, of course, this week we are seeing actually over the last couple of days. A little bit of a pullback, very rightful. We can see this RSI is up above that 70, overbought. This is your 10-day simple moving average. The stock's price is well above that upward trending 10-day. So really just by eyeballing it, you can see the stock is extended and do a bit of a pullback, which is what we are seeing certainly this week. And then we did see RTN is another example within that aerospace defense, not as healthy looking. This stock is still trying to reverse this downtrend from last year. It did break up above the 50, up above that 10-day, but we still have this downward facing 200-day that very well could easily act as resistance. So Boeing is your stronger name there. So let's go ahead and touch on what areas are not hot this week. And certainly there are more than we've seen in the recent past. But one of the first areas I'm going to touch on is an area that really has been not hot for quite some time. And that is gaming software. This is Activision. And we can see this severe decline here. And this is taking you back to last year. Analysts were certainly revising estimates lower. The company came out with numbers last year that were negative, year over year negative. Actually, they came in below estimates. And a lot of these gaming software guys are really struggling. There's not, as far as having products producing hits, they're in a bit of a dry spell. We can take a look at Take-Two as another software gaming stock. And this gap down here, we can see that the company is really continuing this significant decline that we saw. We can go ahead and take a look at NetEase, another one. Now, this one, we can see the company, the stock dropping a bit here. This is an ADR, they're based in China, and this drop down here below this 50-day simple moving average is certainly a near-term negative. So very quickly, I want you to point out to you, we can take a look at the ETF for China. This is MCHI, very similar to the US markets as far as this downtrend reversal attempt here starting the beginning of this year. And the Chinese market did very briefly break back above that 200-day simple moving average. That was an area that was considered resistance by a lot of eyes were looking at this. It briefly broke above it, looked constructive, but we are seeing a pullback going back over the last several days, indicating that this potential reversal may not hold. So from there, we can take a look at a couple of other ADR China-related software stocks. This is Momo. We can see that the company is down. Certainly this week, SINA is another China-related software stock. Both of these are down about 5.5%. Estimates are down. So we're seeing a little bit of pushback in these China-related stocks. One other software company that we can take a quick look at here is FEFE. And I'm pointing this one out. This is FireEye. We can see this gap down here on earnings. And the company, they actually came in ahead of estimates with their earnings report. However, management guided lower. That's not what the street wanted to hear. Gap down. We can see the RSI now down below that 50, trending downward. Take a look at that MACD. It just today is that black line down through the red, poised to break down below this net neutral zero. So not constructive. The reason I'm pointing this company out is because the cyber security stocks really have been doing quite well. There are a number of companies in this space that have been doing well because analysts are revising their outlooks higher. This is CyberArk, a prime example. Reports are coming out that corporations are spending a lot more on this security, software security, but FEFE is not benefiting from that. Another area that we can take a look at, I'm just going to review a couple of mega cap stocks that are down this week, and they're widely watched. This is Twitter, TWTR, down another 3%. So that's going to be down 10% on the week. the company came out with numbers with some of these, with companies such as Twitter, Netflix. Analysts and investors are going to be keeping an eye out for the number of users, the subscriber base. And Twitter did come out, their number of monthly users shrunk, and the markets responded. Another big well-known company we can take a look at is AMD in that software space. Not really getting hurt, just pulling back a little, but it is a bellwether company and it is worth keeping an eye on. They did come out with earnings last week. Very strong. Markets liked it, but we are seeing a little bit of a pullback, certainly with this stock as well as some of the other semiconductors. Let's move on, take a look at some of these housing stocks. And this is a have and have not space, really, because earlier this week, they came out and announced November sales for new homes, and it was the largest number for November, was the largest in 8 months as far as new home sales, but HOV is not benefiting. The company, it has been in a downtrend and it's continuing to drop. They're down about 8% for the week. We can see this breakdown below that 10-day simple moving average. Going back here, we can see that this is their earnings release and it was very poor. So the stock is not doing well. BZH is another housing stock that is not so hot. Another one that is breaking down. Analysts came out, Wedbush, they lowered their Q2 earnings estimates. So we can see this drop down. So let's go ahead and move in. We can take a quick look on the what's not on the retail side, because we have seen certainly this week and consumer related stocks that are not doing so well. GRPN is Groupon. They're due to report next week, but the stock is dropping ahead of their earnings. They are on track to post really huge growth, but the markets are not looking that way. We can see RSI poised to break below that net neutral. We had a negative crossover here. Let's take a look at FOSL. This is Fossil. Take a look at this gap down. They came out earlier this week. They reported their January sales. Sales were strong. Management guided higher, but they ignored all that. Gap down. RSI is trending downward. Your MACD is below this net neutral, also trending downward. We can take a look at one other company in this space that really has not been doing well for some time. I'm taking you back to June of last year. This is Weight Watchers, WTW. The company came out, they revamped their program, and it's not being well received. So this is just a classic example of a downtrend. We can see this initial break, RSI going below zero, stock breaks below key simple moving averages. MACD had that early crossover. Now it's below that zero. And we can see just the continued deterioration with this particular stock. And we can take a look at one other company, certainly in this space, and that is CENT, as far as consumer driven. Central Garden Pet. Take a look. This stock, and again, it's down another 5% today. Gap down 20% yesterday. Company came in, earnings and revenues were well below estimates, and they were negative. And really, when you see, it's hard to see that volume, but if you were to, we can take a look, but really, when you see this type of gap down on huge volume, you can see the selling really was not completed yet, and the stock drops even further. FCAU is another consumer-related stock. This is Fiat Chrysler. They came out with their earnings yesterday, and the stock gap down 11.5%, another 3% today. Now, they did come out with really strong earnings, but here's another company, management guided lower, and the street responded. RSI, MACD, negative crossover, both in negative standing. This is another one. Take a look at that volume on yesterday's gap down, and the stock continued to deteriorate even further. We have time to look at one other company here that I wanted to point out to you, and as being on the downside, and that's BIIB. biotech stocks have really been struggling here of late. And this particular, this is Biogen, very big, large bellwether biotech company. The stock dropped here. Take a look at that volume. And this has everything to do with a patent dispute with Mylan Pharmaceuticals, RSI, now below that net neutral, and your MACD is heading into negative territory. Stock is seeing a little bit of a bounce today. So this is where you'll want to take a quick peek at the intraday to get a sense of whether this gap down is potentially going to reverse. You can see this is a 1 hour price chart. This is oversold, and if potentially poised to reverse that gap down. I'm reversing, looking at a couple of other moving averages. So that's it for what's hot and what's not this week.
I don't know how you do it. Wow, that's a lot of recap for what's been going on this week. Always appreciate it.
Yeah.
You definitely have a lot. You had a lot more to choose from on the what's not side this week.
True that. Definitely.
No doubt about it. All right. Well, we are going to move into the 10 and 10. So let's go ahead and start. I know our first stock for today is AmBev. And there was an interesting question that we'll take a look at second on the Baltic Dry Index. But I'm going to start with AmBev here and show you what I'm looking at. There are a few things on this chart that I think are noteworthy. First of all, it's been a while since we've been back above $5.30 on ABAV. Notice the gap down that we had back at the end of May. We came back up, we filled that gap, and then we kept moving lower. We came back up one more time, hit that gap area, failed, moved, and then we continued drifting lower and lower. Now, if you look, one of the biggest volume bars here is in October. I didn't annotate this, but that hollow candle and that low that was set down just above 375 looks to me to be an exhaustive gap. It looks to me like off of all the selling, we marked the bottom right there. And a lot of times the way you know that you've got an exhaustive gap in play is after that bottom, that initial bottom forms, you go back down and you test it and you hold, and then you come back up and break above the reaction high. So that's what's happened. So we've got an uptrend in play. Short term, the problem that I have with ABEV is that on the most recent high, you can see that the PPO is struggling. So it's starting to show us slowing price momentum. Now, when I look at slowing price momentum, if I also have slowing volume, that to me is a confirming signal. But in this case, this move up, this second move up here in the PPO that didn't quite move to a new high, it came up as a result of these candlesticks with pretty good volume coming in. So it's hard for me to argue negative, or slowing momentum when you've got a stock that's breaking to new highs on pretty solid volume. But this is the way I trade it. Now, normally when I see a negative divergence, I'm thinking 50-day test. I'm thinking PPO centerline test. But when I have a stock that's broken out like this with increasing volume, I don't necessarily assume we're going to go back to the 50-day unless we lose price support on the breakout and a 20-day moving average. Well, the two of them happen to coincide here at about 475. Today's low was 479. We're trying to break up off of that low. I think as long as we hold, let's just call it the 20 days of 473. Let's just say 473. If we can continue to close above 473 and head up and break out, that's bullish. If we close below it, then I think we're probably going to go back and test the last short-term breakout area, probably closer to 445. And that could be your 50-day test as the 50-day continues to rise. Overall, I like what's happening here on this chart, though. I think it's just a short-term concern. I think the bottom came in here on this candle. I think we are beginning an uptrend, and just that negative divergence, if we can't hold on to 473, maybe keep an eye down here around the most recent low. But the volume trends to me say this stock goes higher in time. All right, next up, and I wanted to bring this one up, the Baltic Dry Index, and it's a shipping and trade index. A lot of folks use this as a leading economic indicator. And you can see if it's a leading economic indicator, we're in big trouble because throughout 2019 so far, it's been straight down. I personally don't like this as a leading economic indicator, and I'll tell you why just by one look at a chart. And that is, let's go back here to the monthly chart on the BDI. Now, it might be a decent short-term indicator. I haven't really looked at it on a short-term basis, But here is where the S&P 500 bottomed, back here at the beginning of 2009. Since then, really, we were probably at, let's see, in March, we were probably somewhere just below 2,000 on this index. Now we're currently at 610. So the long term of the BDI to the downside has been, the long-term chart has been down, even though we know the S&P 500, we've been in a long-term bull market. So I think the long-term ability of this index to predict what's going to happen in the stock market, I don't like. Now, if you're only going to go back over the last 2 years or 3 years since that 2016 low and say, well, yeah, here it is going up and the market went up and now it's going down, well, that's fine if you just want to use the last 3 years data. But if I go back and look over time, I don't really see it as a good indicator. 2005 certainly didn't work. 2004 didn't work. 2010 through 2013 didn't work. I mean, the S&P 500 took off. So I think that using the Baltic Dry Index, for me, it doesn't work. If you like it or can find short-term benefits in using it, by all means do so. As far as annotating it, I would just say it really hasn't done what the S&P 500 has done. And since 2009, somewhere in here, you can see we have actually been going down over the last 10 years, while the S&P 500 has had almost an historic run to the upside. So I'm not a fan of using the BDI as a economic indicator, leading economic indicator. Do we have some others?
Yeah, Kronos, C-R-O-N.
Great, Kronos. Well, when this one broke out back here above 14, I remember doing it on the show. I said I thought this was one of the best stocks, the best looking stocks. And I know, Mary Ellen, you love these basing periods. Mm-hmm. And this was a stock that based for quite some time here, for several months, trying to get through 14. And when it finally went through 14, it went up to 16, came back down, tested 14, and then took off. And the stock nearly doubled in 2 or 3 weeks. Now, that's not sustainable. And I do expect maybe we'll consolidate again for a while. I mean, we had some big runs, and then you had to go through some pain for a while. And so I think short term, we could be in for something like that. I think to the upside, we're going to most likely be bound by about 23.25 to 23.5. To the downside, initially what I would be looking for is the rising 20-day moving average to hold. We haven't had a test since back at the beginning of the year. So I think when we do get that first test of the 20-day, I would expect to see a bounce. Otherwise, I don't know, 23.5 could be problematic down the road because that was a near-term top with a lot of volume. It's probably going to take a little bit to get through that.
Okay, and then another one in that space, CGC, Canopy Growth.
Yeah, Canopy Growth also having a really strong move, but notice we have not broken out above that October high after a really big move in the third quarter into the fourth quarter. But with this move to the upside, very heavy volume, I think it's normal to get these moves back down to test the rising 20-day moving average. So for an aggressive trader, somebody who's kind of throws the risk to the wind, I think you've got an opportunity here on the 20-day moving average. For those of you maybe who are a little bit more risk averse, this is a stock I think you have to be really careful with because it is incredibly volatile. I mean, it was $27 to start the year, and it just hit 52 4 or 5 weeks into the year. So you can see the kind of movement to the upside. It also can come down that fast, as we saw back in October, how quickly a stock can reprice. So I would just be careful. If I traded it, I'd be a buyer on the 20-day. But if we went much below $44, $43.50, I think I would cut my losses and move on. A move back up to test this 50 area is where I'd take profits.
And then Teladoc, TDOC.
Great. All right, Teladoc double top, actually triple top if we go back here to the beginning of December. So we have come all the way back up to get everything back that we lost in December. I think that's constructive, but we still have a lot of work to do. The selling in December, obviously very heavy volume. The move back up was not on as good a volume. I'm going to bring this one up versus I'm going to bring it up in a relative chart format just to see if I'm getting any hints. Well, the stock relative to the software group has been downtrending. So I mean, Mary Ellen and I have talked about so many software stocks both today and over the past several weeks that I think look better than this one on a relative basis. So I personally would stay away if you are in it or thinking about getting in it. First of all, you're in a great area, software. I love the group, but I would have to keep a pretty tight stop because it's not one of the best charts out there on a relative basis. So I'd like to see it bounce right here off the 20 and then head up and break out above 65 with increasing volume. That's what I would look for to confirm my belief on the long side. A breakdown below the 20 and especially below the low that was established here on, looks like maybe January 23rd, around the $60 level, close below 60, and I think that would be bearish, especially when you consider that software is breaking out relative to the S&P 500.
And then we can take a look at Amazon, AMZN.
Yeah, I mean, Amazon is a little bit like the poster child of the overall market. I mean, when you look at the chart, you've got, let's see here, you've got the double top, but when it came down, actually today's action, I'm a little nervous about Amazon. I did not see that it was down today this much. But I was watching that 1600 level, and I think last time we looked at this chart, we wanted to see Amazon hold on to 1600. And I think it's pretty clear when you look across, here it held at 1600. We had a support level here hold at 1600. And then since this rally in 2019, we have seen multiple tests of 1600. Today, we are below it. Unless we can come back up today and get back through that 1600 level, short term, I think this is a bearish development today on Amazon.
And then GOOS.
Right. All right, Goose.
Canada Goose.
The Goose.
They're due to report next week, actually.
Oh, wow.
Yeah.
I would say, you know, this one took a tumble in December and hasn't come back up the way some others have come back up, but it had outperformed by quite a bit versus the apparel retail group heading into, this would have been November. And it pulled back and it is now broken back out. It consolidated for a little bit and it's now starting to strengthen again, which I think could lead to a solid report. Now, again, I don't like to hold into earnings, but I think that the stock's going to continue to hold the rising 20-day moving average. So on this chart, in terms of annotating, we definitely would want to watch that. You can see we're about to get that golden cross where the 20 comes up above the 50-day. And as long as that holds, keeps moving up, it's just a matter of time before the 50-day starts to turn back to the upside as well. And that's when I think it'll really begin to show in terms of strong momentum. So I'm a fan. I would, you know, if I had to bet on earnings, I'm going to bet that they beat. I think they're going to come out with some good news. Mm-hmm. But if you do decide you want to get in and hold into earnings, just beware that is your risk. It's always a hard call to make.
And then Xerox, XRX. This was on our What's Hot last week.
Yeah, I mean, it definitely has had a huge move to the upside. This is a stock, I think it was the other day when John Hopkins was on for Earnings Beats, that we talked about Xerox. And if you remember, and you probably remember this as well, Mary Ellen, and maybe you still do, but back years and years ago when I was in public accounting, I never said I was going to make a copy. I was going to go Xerox something. Kind of like we talk about Google today. We're not going to search something. We're going to Google it.
Right.
And when you look back at the history of Xerox over the last, well, you can see the last decade and a half, it's gone nowhere. And it has risen off of the 2009 low. But if you look back to the initial pop at the end of 2010 and look at where we are, this has been a long-term underperformer. And every time it seems to get something going to the upside, you can see that failure to break out. Then you move to the downside. Then we have a false breakout to the downside. Now we're coming back up. It just seems like on a long-term basis that we are range bound. So I'm going to annotate this long-term chart and just keep an eye on these levels. And until we can break out in one direction or the other, I don't know. I just think this is a stock personally that I would stay away from.
And then ACB.
ACB. Oh. Was it ACB?
Yes.
Okay. Oh, another cannabis stock. Okay.
Mm-hmm.
Well, it got to the reaction high on big volume from back in October and failed. So let me draw that line across here because I think that's a big level now that we need to try to get through. Here was the move down. Check out the volume on this gap down. Look at the heavy volume on the gap up and then failure. Go back up. We test. We fail. Look at what just happened earlier this month. Went right back up to this 8.25 level and failed. This is one that's got some really nice looking volume on the advance. So I think that there could be some institutional accumulation here in the stock, but a breakout above 8.25 is what I'm looking for. I think if you get that, it could be a quick trip back up near that $12 level. So this is one, again, very aggressive, very volatile. But if we get that breakout, I think it could be a nice move to the upside here.
And then STX, Seagate.
All right. And that is our last one.
It is the last one.
All right. Okay, Seagate looks pretty good to me. I like this gap up with volume. For the most part, it is holding to the downside. So I would say as long as it holds 42.5, I would be okay with the stock. And I'm looking right here. After it came out, I believe that was earnings related. I'm not positive. But here was the gap up. We went back down. We held that 42.5 level. Went back. We challenged the highs. So I'm going to say 42.5 to 46.5 is the range. But I think we bottomed. I think we have a double bottom. I think very similar to what I talked about earlier. This move down looks like an exhaustion gap. Big volume, move down to about 36, come back up, back down to put that double bottom in. And now this 45 level has been cleared on a couple of occasions. So I think the stock's going to go higher. But short term, we're in this trading range. Let's see which way we break. I would either hold off on the breakout if I was looking to enter, or a pullback closer to that 20-day moving average. Then I could keep my stop pretty tight. And that is it.
Very good.
Yeah, I don't think I went through them quite as fast as you, but I'm just going to throw out there I had to annotate.
You're going to need more coffee, Tom.
Yeah, I'm going to need a lot more coffee. I don't think I have enough coffee. All right, so there you go. There is the 10 in 10. And let's go ahead and take a look at a final market update. And I wanted to show you a couple things here as we go through. First of all, you can see on this chart, the Dow Jones down 178, but it is off the earlier low, which we saw about 11 or 11:30 this morning. So we have come up pretty nicely, about 100 points off the bottom. The NASDAQ also doing the same thing, trying to break out above the earlier reaction high today. The S&P 500, and I'm going to show you a chart in just a second, but we did hold on to key support to the downside. And then the Russell 2000 also moving back to the back up after the earlier lows. Let's take a look at the sector summary, see what's going on. Still, we've got utilities leading to the upside, and energy continues to trail to the downside. That's not good. But I did have a chart in my blog article today, and I just wanted to show that chart on the S&P 500 because, you know, everybody wants to know, are we going to go back down? Are we going to retest, or is this a real rally that's going to continue with just normal pullbacks along the way? Well, one thing that I'm going to try to follow pretty closely is the S&P 500 on this hourly chart. During this move to the upside, of course, the first move up, we were just so oversold and the volatility index was so high. This was just a snapback rally initially. But it's been a little bit more rational since then, I would say over the past 3 to 4 weeks. And we have an uptrend line here that I'm watching, which currently intersects at 26.75. And we had these two prior tops, which when we break out, that prior resistance becomes support, also at 26.75. So when we were coming down today, and I mentioned at the top of the show, we still haven't lost support. This is what I was referring to. 26.75, I think, is a key area. And if we take a look at the charts on the S&P, I'm going to bring up a couple of things. 26.75, I think, was pretty clear on that hourly chart. The daily chart, we have the rising 20-day moving average at 26.66, which is just 9 points lower. And then on a weekly chart, the 20-week moving average, which we climbed up above, that's the green line here, that is at 26.74. So there is a lot of support between the 20-day EMA at 26.66 your 20-week EMA, 2674, the trend line, and price support on the hourly chart at 2675. If we go down and take out all of that to the downside, I think we have to be open potentially to another sell-off here in the short term. Until that happens, I would actually be thinking about buying into this sell-off. And if we lose those levels, just quickly getting back out, taking a small loss, and then seeing where the market goes from there. But a lot going on here, and just wanted to kind of, I know maybe it seems a little too simple, but there are a lot of areas between 2666 and 2675 that make sense that we would see buyers come in. And so if we don't have those buyers, or we have too many sellers and those buyers can't hold up the price, then I think we could have some problems going down the road. All right, let's go into our final segment. This is Turning Point, and this is a segment that many of you, I think, are familiar with. We've done this several times. I know Aaron and I have done it. And so I thought we'd do this today with Mary Ellen. She has not done it before, and I thought it would be a great opportunity for her to give you a little bit of an indication of her style. And Turning Point is simply a segment where we're looking for critical junctures on a chart from a technical perspective. That could be a turning point or an inflection point where we might see an uptrend end or a downtrend end. Just something that looks interesting to me and Mary Ellen. So I'm going to let Mary Ellen go first and give you her Turning Point charts. What do you got?
Oh, righty. Yeah, I have a couple of names here. I'm sticking with better known stocks so that there's something, so people may have a little more in the way of their own insights on some of these companies. So the first one that we can take a look at is JP Morgan. And I talked a bit earlier about how some of these banking, money center, larger types of firms are struggling a bit this week. So what I wanted to point out, we're looking at a daily price chart of JPM, and we can see that the stock certainly did get hit. This is certainly in line with the markets, the broader markets, but a lot of these financials really suffered during the latter part of last year. So what we saw here is the company actually came out with earnings. As many of you may know, a lot of these bigger money center banks, they are the first to report their earnings. And so I'm going to pull up a weekly here to give a little bit more perspective. And on the weekly, about a month ago, they came out with numbers. That's this right here, this bar here. And the stock actually traded up quite nicely on the week. It was up 5%. So we can see this downtrend. This is December, tough period in the markets. With the markets, it began to reverse, and then it broke up above that 50-day simple moving average, the 10-week or 50-day, and that was constructive. So it was with an eye toward eventually potentially reversing and going higher. But take a look at this RSI on the weekly. It never got up above this net neutral. And realistically, we are going to find resistance here at this very flat 200-day simple moving average. So a lot of times it's really helpful to take a look historically at what a healthy period in a given stock, what does that appearance look like? So we can go back to 2016. This is that correction in the beginning of 2016. What did that reversal out of the correction look like? Well, it was the stock breaking up above those key simple moving averages in line with that RSI trending upward, and the MACD getting up above that net neutral. So what we have here is a stock that in essence is a bit trapped. So we would need to see it break up above this 200-day, and then we still have not gotten that positive crossover on the MACD, nor is it up above that net neutral. So that's on the weekly. And then of course we can use the daily as a way to guide you. And on the daily in a shorter near term, that RSI is actually trending downward below that 50. And the stock did break below not only that 10-day, but today below that 50, we have this negative black line through the red, negative crossover. So as far as it does appear to be turning negative. And that, I'm sure, is what we're going to be seeing with a number of these stocks that we're going to be looking at today. Let's take a look at a biotech stock, Gilead. And actually, before I do that, this is really helpful, certainly for my work and for those of you watching. When you're looking at a given stock, it can be really quite helpful to look at an index. I'm going to pull up IBB, which is the NASDAQ Biotechnology ETF, just to get a sense of how is the overall group doing. This is a daily chart, and we can see that a lot of biotechs did reverse with the broader markets in the beginning of January, the beginning of this year, but more recently, they've really been treading water, so to speak, marking time back and fill. Now, this is a very big group. Over 500 stocks are in it, and there are certainly winners in the biotech space, but overall, net, they are not faring well. And certainly among those that are not doing well are some of these bigger biotech. So I'm going to pull up Gilead, GILD, if I'm not, that's the gold ETF, but let's take a look at GILD. And what we are going to see here is a stock that really has not even reversed or done well with the broader markets. And go ahead and pull this up here, and you'll see that it had a little bit of traction here, but has not done well. So now we're in a period where it's breaking down below that 50-day simple moving average. RSI is down, and your MACD. So this does appear to have more downside. This whole downward trending position here is still in play. We're still looking at a stock that is very much in a downtrend. Let's take a look at an asset management company, and this might be in line with JPM as being certainly well known, and that's T. Rowe Price, TROW. This is another one that's dancing, if you will, with these key moving averages here, but overall, it's been in a very significant downtrend that it has yet to reverse. We had a little bit of a head fake here back in December. Of course, the markets, it got clobbered, another head fake, but now we do appear to be failing again. The company just came out with their earnings, and management was not so optimistic for 2019. And what, in line with other organizations, T. Rowe Price cited December as being a really tough period as the markets dropped. So too did activity. As far as funds, they managed quite a bit in the way of mutual funds, and they saw huge outflows, which of course negatively impacted them. Let's take a look at another stock in this very same space. AB, that's Alliance Bernstein, really just to point out the difference, because this particular stock, you can see it reversed with the markets, but it's acting and performing quite a bit more constructively. Both of these are daily price charts. Your RSI is up here above this 50, and your MACD is up above this 0. Now, we can get a negative crossover. That's going to happen as stocks pull back, whether it's with the broader markets or not. But AB is actually finding buyers on this pullback, and it's up on an otherwise not so great day in the broader markets. And we have time to take a look at a couple of other ones. I'm going to pull up. This is another one where, let me go ahead and pull up the stock real quickly, EVRG. This is a utility stock, but let's go back, and I talked about the being diligent and taking a look at how the broader group is doing. So XLU is the S&P ETF for utility. We are seeing a bit of a move into more defensive areas of the market. I'm going to pull up a weekly of XLU. You can see it's up 1.6%. So utility stocks are one of the top performers on the week. So with that in mind, you may want to very well drill down and take a look at some of the individual names. So I'm going to pull back EVRG. This is a smaller utility stock that we can use to get a sense that it could be turning. So this is an area that worked well, certainly while the broader markets were deteriorating. Since then, it has fallen out of favor as a lot of growth stocks, companies are coming in with nice earnings. But take a look at today's action where the stock is breaking back up above that 50-day simple moving average. Your RSI is trending upward. And we can also see that the MACD is just now poised to break up above that net neutral. So you can bet that this is going to be indicative of any number of utility stocks that are starting to turn as we are starting to get a little bit more in the way of a defensive feel. And we can take a look at DELL. This is another well-known stock, Dell Technologies. And this particular chart is certainly the action in it. We can see we're looking at a daily price chart, and the stock is really holding in quite well. It is up almost 1.5% on an otherwise tough day in the broader markets. But let me take a look, because we can see that this stock really is in an uptrend. It's trading up above that 10-day simple moving average. But I am going to pull up a different chart that's going to be a little bit more telling and that we can review in a bit more of a concise fashion. This is Casey's General Stores, CASY. And what I wanted to point out with this particular stock is the fact that the stock is, again, really just kind of moving around these simple moving averages. And this is another type of company that can be viewed as defensive. It's a consumer staple stock. But what's happening here today is the stock is breaking down below not only that 10-day, but also below that 50-day in a negative fashion, and overall your trend is negative. We can see that this MACD had this negative crossover, and it is poised to trend below that net neutral. We can also take a look historically and really get a sense for the volatility, which is surprising given the nature of this stock. Going back from this June to its peak back here in November, it traded in a very orderly fashion. This is the release of very strong earnings. But more recently, the stock has really, volatility has picked up. So this is a stock that I would not be drawn to in any way. There are certainly other better defensive companies that you can take a look at. We can Procter & Gamble and others that this particular stock broke out of a base, had a really significant move here, and is consolidating that and looks quite a bit more constructive. I'm going to turn it over to you, Tom.
All right, sounds good. Let me go ahead and pull up first ATKR. Now, all of these stocks are going to be stocks that I have on my strong earnings chart list. So these are all companies over the past couple of months that have reported very strong numbers. And I think recently, because of the weakness in the market, could be reaching a turning point. So when you take a look at ATKR, I could draw a line across here, but really this breakout level at about 22.5, stock was just up to 25.5 2 days ago. And we've come back on relatively light volume to test both the 20-day moving average and this price breakout. So ATKR is one that I certainly would keep on my radar as a possible turning point. VEEV, which is Viva Systems. This is a software company. When you look at the relative strength on this stock relative to software, so this is a company that is blowing away the software group, and we already know what the software group is doing. It's breaking out above relative to the S&P. So this is one of the best stocks in the market right now, as far as I'm concerned. And the breakout above 110, we got up to 117. We didn't quite get all the way to this breakout point. Our low today was 110.61, but we may have already begun to see this turning point as the Viva has responded back to the upside. SPLK, this is another one in that same space. You can see also threatening a breakout. It's coming back up today with the market down, so we're seeing a lot of relative strength here as well. Check out the relative strength versus the software group. It is just now breaking to a new relative high. So this is one to keep an eye on, especially on a breakout. Now, it's against resistance, so the turning point here could be a pullback. But if we break out, get some increasing volume, I think that would be bullish for the stock. OLLI, this is Ollie's. And Ollie's, I have said, has been one of the better broadline retailers for the past few years, maybe even better than Amazon. And I think it's at a really critical area. It gapped up back in the second week of January, pulled back at the 20-day, and now we're right back up to this gap resistance area. I think if we break out, we have a really good shot to head back toward the mid-90s. This is a stock I would certainly keep an eye on, but it is at a possible turning point because this area right around $82.50, $83 has been where we have seen turns in the past. AOBC, this is American Outdoor Brands. Now, multiple levels of support down here at about 1180. That's where we gapped up on massive volume. And I've said before, when I get these big gap ups like this and it keeps going up, I don't wait for a pullback to the bottom of gap support. I look for the top of gap support. If you drew this line right across here, you would see how well that has been holding. Now, we are going back down again. Maybe the third time's a charm where we get a breakdown. But 1150 to 1180 looks like an area of a possible turning point on AOBC. Bank of America, one of the strongest stocks, in my opinion, at least in the banking space, when they came out with their earnings back in the middle of January, gapped up, very heavy volume, kept moving up. Notice when we pull back, it's the top of gap support holding, not the bottom. I would be looking for $28 to be a turning point here on Bank of America. OSIS, and this will be my last one. OSI Systems, another one that gapped up, went all the way up over $90, pulling back to 86 and change. Watch if it gets back down into the mid-80s. I'm going to say $84, $85. Notice the rising 20-day moving average coming up at 83. We also had this prior high over here around 83. I think if we drop another couple bucks here on OSIS, we will be at a potential turning point. So let's go ahead and go over the summary slide for our turning point stocks. And then we're going to bring the poll up after that. And just keep in mind the poll, and it was just a fun poll, something I always like to talk about. But we'll get into that in just a second. I would be interested, though, Mary Ellen, I don't know if you saw the poll, but do you know the difference in performance on the days of the week since 1950 on the S&P 500?
Oh, yeah, they're actually, that Trader's Almanac has done that, where I don't actually recall. I know Monday is a significant day, but I'm fascinated.
Well, I've been tracking it for a long time as well. So I am Market Watchers Live, the version. I'm the Market Watchers Live version.
Oh, look at that. Okay.
Stock Trader's Almanac. But here, yeah, you can see probably some people have seen this before. That's why everybody's going with Monday. Monday is the correct answer, by the way. It is the worst day of the week. And since 1950, Mondays have produced minus 14% annualized return. And you might think, well, it's just one day. Well, it's one day, but it's over the last 69 years. And that one day happens every fifth day. So if you knew that 1/5, let's say, all right, the market, this covers 69 years. 1/5 of that is what, 13 years, 14 years, something like that?
Yeah.
14 years almost. If you knew that over the next 14 years, the annualized or the return every year was going to be minus 14%, you'd probably be pretty disgusted about the stock market the next 14 years. That's the equivalent of what's happened on Mondays, which I think is fascinating. Fridays, actually Wednesday, Thursday, and Friday are the best days. Wednesday, hump day, is your best day of the week. I don't have the numbers here handy, but it's on the S&P, it's over 20%. I think on the NASDAQ since 1971, Wednesday is like 27% annualized return. And Monday's also very weak on the NASDAQ as well. But anyhow, I thought that was an interesting poll. I thought those of you who maybe weren't familiar with this would get a kick out of it.
So stay in bed on Monday? Is that what you're saying?
Yeah, I mean, when you think about it, the Monday blues, aren't you, somewhat depressed on Mondays versus Mondays? I mean, when you came in this morning, Mary Ellen, how excited was I to see you?
Oh, you were thrilled.
I was. It's Friday.
I thought it was all me. I didn't realize it was the day of the week.
It is all you. All right, there's the upcoming schedule. We need to wrap up here, but you can see Erin's got her workshop on Tuesday, and then we'll have Rick Bensignor in on Wednesday. One last reminder, no Market Watchers Live on Monday, February 18th. It's President's Day. The market's closed. You don't want to hear us talk about a market that's closed. So we will be back, obviously, on that Tuesday, the 19th. I want to thank all of you for being with us today. Please remember to complete the survey as you exit. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays, from noon to 1:30 p.m. Eastern Standard Time. Have a great Friday afternoon, everyone. Enjoy your weekend. Be safe, and we'll see you back here on Monday. Happy trading.
Is your portfolio positioned to profit from continued market volatility in 2019? Join over 100 investing and trading experts, including policy guru Steve Forbes, emerging markets icon Mark Mobius, America's best income investor Bruce Johnstone, elite energy analysis Stephen Schork, and trading visionary Tom Sosnoff at the Money Show Orlando to get the best ideas for protecting and growing your investment portfolio during 250 in-depth presentations. Claim your free pass now at orlandomoneyshow.com.